Hello guys, how are you doing on this fine Saturday? It's raining for once. This video we will do some very long-term views on the commodities that I track, that we track. Gold, silver, oil, platinum, palladium, and uh, and these things. So this will be, as mentioned, very long-term outlooks. So again, if you're buying gold here or silver here based on the targets and potential targets with the expectations of selling within 1 year, you will get disappointed. So this is a very large long-term macro view of these things. And yeah, as always, guys, follow me on Twitter. Almost getting to 10K, which is a big benchmark. So again, would be very nice to reach those numbers. And also on the Substack, as you know, where I do basically daily updates on commodities in general. The deal with uranium, gold miners, silver miners, platinum, oil stocks, and you name it. So this is where it all happens. Buy signals, walkthroughs, different things is getting shown every day. Basically, what I see is happening, and when is a stock a good place to buy, and all that a good stuff. So good. Let's start, and we will start with gold. And I have a blank sheet. So it's a clear canvas here, you can see that. Um, Gold, we have to zoom way out. We are on the 3 monthly time frame. So every little candlestick here is 3 month worth of trading. That is roughly 65 days, give or take, because you have roughly 22 trading days in a month multiplied by three. So it's a lot of daily price action going on there. Again, without going into too much detail, again, this was 100 years ago where gold was fixed $20. And then over here again, you had they took in the gold and then they re-evaluated gold up almost 100%, almost 100%. Of course, causing massive inflation, right? When you do that all of a sudden. And this was just before you took all the gold from the public, right? And then after that, boom, they lost basically 150% of their wealth overnight. And then we have, of course, back here in the 1980s or thereabouts, where gold was still fixed at 35 ounces. And then Nixon, I think it was, said no more. And you had a little pop. You came back to that event, and then boom, you had the 1990s, excuse me, 1970s bull market run, where you went from roughly 30 to basically 900. So you were doing quite well, like 30x back then. Um, but where are we today? Gold, you can see here, has been basically, if you look at the 3 monthly time frames, it's basically going up in two big periods, right? Where this is the start in 2001, and we are still in a raging bull market, right? Ever since then. So, what potential targets could gold hit? Remember, gold difficult because the bond market broke right around here. So you had a 40-year bond market from here, this peak, the 1980s, and then 40 years. And then the bond market broke with the event of 2020, just after. So let's see what we can derive and see where we could hit. There are, multiple ways of doing it. And one is simply, again, we do have a bit of a channel here going forward. And again, I think once we get to roughly here, which is 5,400, which again, that's not 10 years out. That is way closer. That could happen, in my view, in 2026. That could happen in 2026, maybe going into 2027. So that is that target, again, a bit more short term. And then we do some Fibonacci extensions, which whenever they come up, I really like to do based on prior analogy and movements. You can see here back in the 1970s, we basically had the initial pump, and then we dropped 50%, again, from roughly 200 down to 100. So you had a 50% retrace. And if you are in a overall macro bull market on any sector, any ticker, whatever, if you get to the 50%, then that's a good place to add more as a default, of course. And then we ran the 100% measured move, which was 570, and you overshot actually quite a bit. You overshot almost into the midpoint between the two fips. So if we do that same analogy based on this move here that started it in 2001, we do the same to the highs, to the lows there. And you can see here as well, you can see here that from the highs, which was almost 2000, we went down almost 50% again, just like we did back here in the 1970s. You went down 50. So this move down here is that one down there in my book. So we can see if we hit the 100% measured move, that is 8K, right? That's that move there. If you get similar overperformance, you will get to somewhere around here, which could be 12K. 12K gold based on the prior move up. And with that, thing in mind is that I think we are at a way worse state now than we were back then. So you could get way more overperformance when it comes to gold. Also here again, there are some shorter term trend channels that you can add on, right? So this one again is the same Fibonacci extension and the trend channel, which I like to do most of it, or most of the time. It takes us, as you can see here, roughly 8K if you look out there on the right side. So roughly 8K when we get to there, matching well the Fib extension tool. So one more thing, again, you can see here is also we actually have a very beautiful saucer, but I think it's called that, with a cup and handle in play here. And you can add that one over there, and then you have one more here at the end. You can see that very powerful price action on any given time frame. This is actually quite good. So again, then you can, of course, this is the move that we do, and then the measured move from the momentum. The 100% measured move takes you to there. If you measure from the top, again, you're getting for 15K gold. That is exactly what I think is going to happen. And when do we reach those targets? Again, I hate to do timing, but again, you can see here if we try to extrapolate this move here out, something like that. Again, it will, again, 2030, I think it will be a bit steeper due to the whole situation that we have. But 2030, 33, depending, then again, we're getting to these targets up here, 12,000, maybe even a bit sooner actually. But yeah, so it will not be tomorrow. Don't get me wrong, this will not be tomorrow. Um, I've also heard many people say, yeah, but we've come so far already. And yeah, we have. Gold has been one of the best performing assets ever since we broke this little triple top over here, right? Ever since we broke that cup and handle play, we have basically gone from 2,000 to 3,500 in a year. Massive, massive move for gold, doing 60% or whatever that is in 1 year's time. That is insanely high. However, I think the bull market has just begun. And this was also a setup or like a ratio that I showed way before it broke out. You can go back and find it on X. And I said, this is by far the biggest cup and handle that you will ever see. And it is basically gold divided by inflation. One thing to note, inflation is heavily understated by the governments for reasons, again, if people really knew how much of currency debasement that they do, there would be riots in the streets. Therefore, they understated and they changed the parameters in order to make them look, less to the people. So they are in that belief that hey, yes, we have 2% per year, but guess what? Gold goes up 10% per year, roughly, on average. That is your true inflation. Gold tracks inflation, and gold goes up on average 10%, meaning overall, when you're talking inflation, when it comes to food, housing, what you buy, stocks, what have you, 10% per year. So if again, the money in the bank, they lose value quite big time. So here it is, the big cup and handle, boom. Again, there is the cup and handle with a bull flag at the end. if this was a stock or a sector, it doesn't matter. Extremely clear and powerful price action for any ticker that you look at. And this is gold divided by inflation. And what we almost always do is actually measure from the lows of the cup to the high to the break point, and we get 49, if my math, yeah, almost 49 here, but you know, 45, 46 here on that measured move, meaning gold will outperform inflation for a long, long time. So the gold bull market has just begun, and it will not go in a straight line, of course, like that. It will be sickety sack, right? Of course, it will. You'll get some pretty wild ones, but again, that is how we get there, in my view. And you can see here again, it points to 2035, which is 10 years from now. But remember, gold will be an inflation hedge with over 350% outperformance of inflation during that period. So yes, I'm incredibly bullish on gold still. Nothing has changed on the long time frames, and yeah, you can even see here the big 100% measured move from this impulse here. You add it to there, right? That's 17, and we are now at 10. So we still have 70% until we reach a big benchmark with this whole setup here. One thing to note before we go on with silver, and that is we are at the all-time highs in this ratio. And that is why you're seeing gold stalling a little bit, because we are at the all-time high here in this ratio. But to me, clearly, this is still some sort of consolidation pattern here where you basically have a big, large wedge going on like that. Right. So now we're still winding up to break that high and go beyond, in my view. So gold, incredibly bullish targets, as shown. That is my thesis going on. When we get to them, difficult, but that is definitely some mathematics behind it, and you can see gold still do incredibly well. Good. We will be on the 3 monthly time frame as always here for this video. Silver, hated by most, loved by few, but soon I think it's going to be envied by many. And again, if you didn't know what ticker this was, if this was a crypto stock, a crypto whatever, people were saying this is the next big thing. You have the big, as you know, you've seen it 100 times, I know, the big 45-year cup and handle play. And again, if that was some sort of crypto stock or tech stock, AI stock, whatever it is, defense, people were saying when we break 50 here, it's going to rally like big time. But that's not the case, because silver has let down many people for quite a long time. So where do we think this could go? And there's actually some very beautiful symmetry to this all here. And in my view, this goes back again 50 years. We take the highs from there, you connect it to the lows here, and then we can see we're actually getting a pretty decent trend channel going forward right around there. So you can see connections here, tagging multiple times and tagged here. So the way I do things, again, this is the overall system that is in place now for 50 years. So that's the main driver. This one here, main driver. Therefore, in my view, when we break this cup and handle, right, we go to here. It sounds insane, doesn't it? To go to 400 and something dollars for silver. But that is basically what multiple things are aiming at, getting to. You can even see the cup and handle here points to, again, in this case here, it's shown quickly here, $700 for silver. Yeah, 700. And also here we can do the impulse that we have from the lows here just to get the midpoint here, which is 133 for that 100% measured move based on that impulse alone. So a lot of good things will happen above 50, but remember, and people on Substack know, that 1 year ago we broke that trend line there at $26, and it was mentioned now silver will look back no further, because we are then, in my view, going to 50. We will get the pullback, and then we're going to shoot way higher when it comes to this Lovely metal that is silver. We can do similar, silver divided by inflation. We haven't broken out on that one yet, at least not the 1980 high, but we're definitely getting close. So yeah, silver long term looks insanely strong. And I do also believe if you look at the gold and silver ratio, which we will actually do now, and that is, I think that we are going to get to these lows down here, right? That low down here. I think we're going to do the correct one here because we don't get the entire thing, and that is a bit problematic. If I can do this here, just 1 second, I'm gonna find it for you. One, just to get the XAUUSD divided by XAGUSD. That should take us to the correct one here. We will remove it all. So good. Yes, here it is. Fantastic. So this is again the silver and gold ratio. And whenever we are high, meaning it takes more silver to get the gold, basically. And when we come down, that is when we enter big, big, big rallies in gold, but a lot more in silver, a lot more in the silver stuff there. So as you can see here, this was the low in 1980, right there. We basically reset the whole move, and that was 15 to 1, right? 15 to 1 is those levels, which I purely believe we're gonna hit. Again, this will be 10 years out maybe. And remember the targets that we had for gold? Well, 12K, 15K, and if you divide that by 15, all of a sudden you're getting some very, very high silver prices. And that will, again, if you do that, you're assuming that silver and gold will peak at the exact same time, which they won't. But again, that's what you're assuming. Therefore, again, you might have a spot where gold is peaking and then it starts to retrace 20% or 30%, and that's when you get the high in the silver price, and therefore you're getting those $500, whatever silver that we just looked at. Here again, I'm just once we start to break, and I believe once we get below 90 in this ratio, that could be the big trigger, the early trigger for this whole thing coming down hard. Um, but we're now on the 3 monthly time frame, so we can't really see, but it's actually right there. We have a little bit of a false breakout potential. But again, here we do the Fibonacci extension. The 100% measured moves takes us to 50. And then you have the 0.618, which takes us to these lows here back in 2016 and 2020. And the 1.618 points to the lows in 2011. And then you have the 2.618 here is the lows roughly in 1980s. Again, silver is heavily undervalued by far. And yes, it will come a point where it's gonna show decades worth of manipulation, call it whatever you want, but definitely it has been held down, and that will come. So good. On to one more, which is oil, and you can see here we remove it all. So oil, again, this is a bit iffy here, but there's actually some order to the madness here, even though again it was also kept together with gold here. You can see that quite, and then all of a sudden, of course, what happened in 19, in the early 1970s, where gold was let go, oil did that. So good. What to expect for oil? Again, I will do the same thing because we have whoa, that was not the channel. Quite a beautiful channel going on right there. Look at the beauty and the precision of that. Again, we do it quickly on the fly here, so the alignment is not perfect. But again, you can just clearly see what a big an uptrend we are in, right? So that is the main driver that we're in. That's the main system that basically rules it all. Of course, internally, you have a lot of other systems and things happening, But yeah, I believe again that when push comes to shove and things is going to go really badly, that we could hit the upper trend line here. And you can see those numbers for yourself, but they are very, very high up. Um, and that will be devastating for many people. Everyone, actually. Again, huge inflation, stagflation. And what metals does well during stagflation? Silver, gold, platinum. So let's do also here, you can see some measured moves that we can get here because this is the initial impulse, right, to the lows here. And then you can see when we peaked there in 1980s, we spent 25 years basically winding up or just going sideways. You can see a huge range. It was kept in place in that box there, right? You can see that right there. We are gonna make it red to see the border. That was really bad. But anyway, you can see here once we broke 42 that this measured move, all the energy built in here, all of a sudden, boom, kicked in and we hit basically to the tick here. The target was 117. We peaked at 145. Again, overperformance happens all the time. So if we do similar here, if we do similar, again, we take the lows from that point, the leading up. One could argue that this is the starting point, but again, let's do that. So we take the lowest. You can see here it's pointing to 220, right? If you extend it, you get to the upper end, right? So it depends on how you do that, but in order to have the perfect symmetry, we can actually take it from the 10 to the 140, and then we take the low here. This was COVID map, the COVID stuff in 2020. So that is again a lot of weird things happened with the paper oil market there and the contracts. So again, you can see that actually that impulse with the same amount of range that we are in, you can see we are still within some sort of a range here. Once we break here again, boom, we could go to again 300 and the upper channel. If we, again, depending on how fast we get there, you can see at the bottom it's 2032 or 2030, 2035, again, thereabouts. So oil is in a long-term uptrend. And again, could we have a potential where we are going to go down to here first? Absolutely. But overall, we're still within the overall framework, and that is up. Platinum, we don't have much data. We only go back roughly 30 years. I can't find a ticker that goes back further, but I want to show you, and this is not, the most precise chart, but again, just to get an idea about where we are. Again, the pullback from the dot-com bubble to basically 2 years, we went down 90%. You can see the pullbacks here are quite insane. And again, that pullback there, 75, we have just had 75 here as well. And we can actually do this as a one line kind of thing here. And that is the highs going over. You can see, maybe it's better with like that. So you can see that the highs, here we have a big supply and demand zone. We're hitting it there. And again, massive peak, massive move down to the supply zone. And we are most likely going to go higher from here on out. Trend line point of view, you can see we do have something going on there. We extended. And then you can see again, not perfect as mentioned, but again, you're getting a bit of an overthrow here. But I believe we're going to get back into it and we're going to start to rally once again. So definitely palladium, I think, is bottoming here. And as mentioned, once we get above that high there's a hidden head and shoulders in here. Neckline being 1,250. Once we clear that, we go to 1900s, and then we're back in the uptrend, and we'll go higher. Platinum was and is still a screaming buy, as mentioned many times on Twitter, but also to the Substack, that once we cleared $1,050, then platinum is one of the biggest buys that you can do at that point in time. And I just want to show you how big, again, this was over here. Again, we can look at that again, this was the peak in 1980s. Then you spent the better part of basically 20 years leading to that breakout, and then you backtest, and then boom, you went. Same thing can be seen here, the exact same fractal, like that. You can see that. We peaked in '08, and we spent almost 20 years doing the exact same move, the flush, the bull trap, and then you have the same thing again, breaking out now. Could we do some back testing? Absolutely. But overall, the move for platinum has just begun. That's 400%. Let's see how well it fits with the 100% measured move, actually. Take the lows to the highs, to there. So you can see here again, the measured move, based on all this, was actually 1,700. We peaked 2,300. So again, overperformance, yes, happens all the time. We do the same here. We will take the lows from that point to there and to the lowest point. You can see here that takes us with overperformance to like 3,000, maybe 5,000 palladium based on Fibonacci extensions. And also there is a decent uptrend going on right there. Look at that. Picture perfect trend channel. This channel is the main driver for platinum. And I believe we're going to hit it here. Again, 4,000. And yeah, that is my like base target for platinum, which is 4,000. I do believe it's going to overperform big time, because if you do platinum divided by gold, which we should do, like that. I think I got the wrong ticker. We will do the XPT instead, because I know this one works like that. We can do this. You can see here again, we are almost at 0.5 in the ratio, meaning um, that, one second, I'll do it in a different way, because we need to get the whole thing here. Do we get more data here? Yeah, we do. Yes, we do. There it is. Remove it all. You can see here again, we are at 0.5 basically, meaning you can get 2 ounces of platinum compared to one gold. But also here you can see how underperforming platinum has been. And again, we have some good symmetry, some very, very good symmetries. And actually, it was mentioned on Substack as well, once we got down to here, that this is most likely a place where gold is gonna do, excuse me, platinum is gonna outperform gold. And you can see here we're also close to breaking some shorter time frame stuff here. If we do it quickly, you can see, again, we are definitely starting to break some short-term stuff as well. So I believe that platinum will outperform big time gold. And I do believe that we could hit the upper here, right? We could hit the upper trend line, meaning platinum to outperform gold by 200% over the next 5-10 years. Um, and once we get to there, we are talking a bit over 1 in the ratio. And remember what we talked about gold. We said again, 8,000 gold. Again, ratio-wise, they don't peak at the same time, but I think you get the idea that we could come to parity between these two guys, meaning whatever gold is at that point in time, that is what platinum is going to be. So if gold is 8K, you could have close to 8K platinum. If it is 12K, you will have close to 12K platinum. Platinum, in my view, will be one of the best performing assets by far. It will most likely also outperform, well, it could outperform silver. It sounds insane, but it could outperform silver. But I'm a bit iffy on that one, because that means we're getting way higher platinum prices. Could happen though. Nonetheless, platinum is a huge screaming buy at this moment in time. And you can see it here, right? It was actually, we're going to go to the weekly just to show you. That was the entry, right around there. That was the entry for platinum. This is the the platinum CFD. I used the XPT USD, and that's why the numbers are not correct. But 1,050 was the big mover for platinum. And again here, we will get pullbacks along the way. Of course we will. Of course we will. So every single formation, bullish formation that we get, you buy into that on platinum. So yeah, platinum long term, incredible 50-year uptrend. Again, you can see how it does snap. And once it moves big time, right? So we are talking here 5 years from now, we are having 4,000 platinum minimum in my view. So yeah, this was my view on the big commodities that we track and long-term price projections, reasonings, and looking at prior bull markets, projecting them into what is happening now, in my view. So, guys, that is all. I hope you enjoyed this one here. Have an amazing day as always, and yeah, cheers, guys. Bye.